Good morning everyone, my name is Shane Evans and I'm here today to discuss the importance of adhering to processes in the Financial Reporting Guide. First off, however, I'd like to thank you for joining me today in this meeting. It is an open discussion, so if there's any questions, queries or input you'd like to add, please feel free to do so at any time. The purpose of the guide is to detail the importance of following the processes of measuring an organisation economic and financial information to create financial reports. Each organisational deals with economic transactions and exchanges. These dealings must be recorded into organisational accounting systems. These record information gets collated to produce financial reports that are analysed and used in decision making. If the process is not followed or the information is entered incorrectly, it will create a false report. In the financial guide, there are two different types of accounting systems. There are cash accounting and accruing accounting systems. The difference between these systems are cash accounting systems are used when organisations' revenues are recorded into the accounting period and cash is received. And accruing accounting system is when revenues are recorded when they are earned and expenses are recorded when they are accrued in earnings that revenue. The concept of receiving or paying cash is not relevant in determining profit. There are 6 fundamental steps to accounting processes we use here at QuickWrap. The information collected in the accounting process is recorded and determines the figures for the financial reports. Therefore, extremely important to record correctly. The 6 steps include transactions, journals, general ledger, trial balance, balance day adjustments, accounting reports. I'll also add double entry bookkeeping principles.
Would you mind to elaborate on these steps?
Of course not. This is what this meeting is for. A transaction is a financial or economic exchange between the organisation and the other parties. The journals are used for recording these transactions. All of the information collected from the journals is then posted to the general ledger. Each asset has a separate general ledger account. This account records increases and decreases in each item's balance. The general ledger is the complete set of all these accounts. Double entry bookkeeping is that there are always 2 entries for each transaction, debit and credit. The sum of the debit entries should always equal the sum of the credit entries. This is checked by conducting a trial balance. A trial balance is a statement that lists all of the accounts in the general ledger and their debit or credit balances. This aims to ensure that the overall general ledger is in balance. A balance day adjustment is when the accounts are adjusted before the end of the accounting period so that the final reports are prepared. Accounting reports are the end product of the accounting process. These reports are generated from the information collected during the accounting period.
So what kind of reports do we do?
Great question, Rachel. These figures aim to prepare many different sort of reports. They include quarterly, monthly or yearly reports, income statements and statements of financial position. Here at QuickWrap, we ensure that we adhere to the company's legislations and regulations requirements. These need to be closely abided by to ensure that our business operates, runs successfully with minimal ill effect. There are 3 key financial requirements which we adhere to, and they are Australian taxation regulations, accounting and auditing standards, and a goods and services tax, also known as GST. Can anyone think of any additional legislative and regulative requirements that are important to our company?
Well, I can.
Yes, Rachel.
How about anti-discrimination laws and work health and safety?
They are fabulous examples, Rachel. Well done. To name a few more, there are privacy laws, codes of practice, ethical principle and financial legislations. These codes and standards, along with the financial regulations we have mentioned, are all key when remembering our company's principles. Financial reports are analysed and used in important decision making for the company, therefore it's essential that figures are correct from the very beginning. As with all aspects of business, it is important to maintain the company's policy and procedures. It has been brought to my attention that some of these processes are not being met, therefore we need to make sure we have a clear understanding on these importance of financial reports. Each financial transaction results in some kind of financial information being created. These transactions are recorded and collected into our accounting system. From here, the information is evaluated and summarised into a financial report. Records may be kept as a hard copy or electronically. All assets need to be documented, with the records being kept for 2 years before being destroyed or archived. An asset register is used to record the details of each asset, followed by a depreciation schedule, which is used to record the depreciation details of all assets. Financial transactions that affect the asset acquisition and disposal will be processed using Excel, the company's chart of accounts for coding and transaction for journal entries. If these processes are followed correctly, it ensures that the financial reporting will be correct. Are there any questions? Are we all feeling more confident with the financial reporting processes?
Yeah, for sure. I didn't realise just how important it is to ensure that every transaction is recorded and how it affects the end result. I'll make sure I'm a bit more savvy with the process in the future. Shane, you spoke about depreciation before. Could you please tell me a bit more about it?
I certainly can. Depreciation is an accounting method of all accounting the capital cost of an asset over its useful life. There are two common ways of calculating depreciation. They are straight line method and the reducing balance method. The straight line method allocates the total cost of the asset evenly over the asset's estimated life. This will mean that the annual depreciation is the same amount each year. The reducing balance method calculates depreciation based on a written down value of the asset each year. The written down value equals the cost price of the asset less the accumulated depreciation charged against the asset.
May I ask what program is used to record all the figures and records?
Sure. We use a program called MYOB, which stands for Mind Your Own Business. This program enables us to record and store all financial data. It basically takes the care of all our daily bookwork, including invoices, GST, expenses and payroll. It also helps to manage cash flow and ATO requirements.
Well, it sounds like it covers everything.
It sure does. Does anyone else have any more questions?
No, I think I'm good, thank you.
Okay. I'm glad we all had more of an understanding of the importance of financial recording. I've made a copy of the financial reporting guide for each department, a quick wrap, and other for each of the managers. If ever you need to recap or unsure of something, please don't hesitate to refer to the guide for assistance. I appreciate your attendance. Thank you.